Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back, Jim. And how are things going out there in British Columbia with the flooding?
Well, the Fraser Valley, which is east of Vancouver, that's what was heavily hit. One of the major dikes failed, and the Fraser River came in to visit during record rain, where they got a month's worth of rain, and November's a very rainy month out here on the West Coast. They got a month's worth of rain in 2 or 3 days, but frankly, most of that fell in just a couple of hours. And if you want to go use the old system of inches, some communities got 4 to 6 inches of rain in 2 hours. I mean, that's just insane. There aren't a lot of areas in the world that can handle it. And where the Fraser Valley is, in Abbotsford, they drained a lake back in the 1920s, and then they built farms on the lake bed. So it's an area that Mother Nature would much rather cover in water anyway. And you can't get flood insurance. Why? Because it's a floodplain.
Yeah, you never buy a house in a floodplain. That is an old trick. We've got, even in Burlington here, we've got one little area that's flooded for, 40, you couldn't even get insurance there, of course.
Of course.
Right? And where I was originally from, a small town called Thamesville in southwestern Ontario, when I was a young lad, we had a flood in the city, and we went up and down the street in canoes. So, you always wonder why people don't include that disclosure, or the buyer rep don't put at least one clause in every offer that the property has never been flooded, or they're not aware of any flooding. But here we are 50 years later, and they're still leaving it out of their contract.
Yeah, and a good sign. If you can't get flood insurance, then perhaps you don't want to live there. Because, sooner or later there will be a flood.
100%.
Always. Is Japan, they have a 10-meter tsunami wall around the entire country, and the quake that hit 11 years ago dropped that tsunami wall 1 meter because it was a subduction quake, and just that 3 feet extra allowed ships and everything to come storming in. I watched it happen live, and I remember saying, we're just watching 25,000 people die, but without that tsunami wall, it would have been 25 million. But even with the best intents, I just said the other day, no matter what kind of armor humans put up and try to protect ourselves from the environment, they're just mere shadows when it comes to forces of nature.
There you go.
Can't stop a volcano, and in this case, you couldn't stop the flood. Yeah, just learn to live with it. And maybe next time, think twice before you build in a floodplain. The provincial government's going to offer aid to the people because they won't have insurance.
Yeah.
But government aid is never enough to recover your total losses. It never is. Never has been, never will be. They'll give you enough, perhaps, so you don't go bankrupt. Anyway, getting to what our show is supposed to be about, real estate. Ross, we have a listener in Toronto, John, who asks, I know Ross has offered $100,000 to anyone who can prove house prices change in a month. The Toronto Real Estate Board in October claimed the average price of a home in the Greater Toronto Area increased $187,000 over the last 12 months. Why are local realtors not out proving Ross wrong and collecting their 100 big bills?
Well, it's because they can't prove it. I mean, it's as simple as that. Zillow in the United States just closed up their iBuyer program. So they closed it up because they were incapable of forecasting house price change, and they were incapable of even evaluating the value of of a home. Canadians should understand when a major corporation like that, Zillow, we're talking a multi-billion-dollar corporation in the United States, the number one visited real estate website in the United States, will offer me $1 million if I will simply show them a simple house price algorithm to improve their own valuation model. There's something wrong there with this whole talking point. And this is exactly what you're seeing here in Toronto, where they're claiming, like this listener said, $187,000 single year gain in average price. So what I'll tell your listener is this. Last week we've been waiting for this, Jim, and we decided to go ahead with it, and we created what's known as the BSLS average price. So instead of the MLS average price, we created the BSLS average price. Now, BS in this circumstance refers to bank stocks, or Canada's big six bank stocks. The bank stock listing service is what we're calling it. And the bank stock listing service average price works the exact same way that the MLS average price does for the Canadian Real Estate Association. And what it does, it creates change in the average bank stock the same way the organized real estate creates change through the MLS average price. So here's how it goes. We're going to be launching this so people can see it live on debunked.ca. So last year, one of our guys got creative and checked, like, there was a TV show called Punk. Well, he thought debunked, and he found out that the domain was for sale, so I bought it, and he's logged it into our site. So if you go to debunked.ca, you'll go to a page on rosk.com. So this is kind of a credibility function for us. So when we see a report that we can debunk, which is basically every report you see about housing, we have an avenue now just to go on there and debunk. So the BSLS will launch on debunk, and you will see live in real time, because we're feeding this from Google Finance. You will see in real time how the Canadian public is manipulated by the MLS average price. And then you're going to be able to question how the hundreds of thousands of people who refer to this metric every single day have been fooled. How do all the realtors get fooled? How does the Bank of Canada get fooled? Why is CIBC fooled? And this is how they're fooled. So the difference between the actual average Big Six bank share price and the BSLS average Big Six bank share price is the methodology and how it's created. Without the acronym BSLS, you really would not know what's going on. And if you don't know what BSLS really means, the methodology that we're using, you would be easily confused that it's just the average price of one of the big six bank stocks. So right now, there are approximately 6 billion shares of Canadian bank stocks available. I think it's 5.9. So there's 5.9 billion shares of Canadian bank stocks available. Okay. So each one of those shares is traded at a different rate. Each one of those banks, the big six banks, their shares are traded at a different rate each day. They're actually traded at a different rate each minute, each hour, each day, each month, each year. Just like houses, folks. Let's just say there's 6 categories of houses, and those 6 categories of houses never change. Those 6 categories of houses are like the big six banks. One of the big six banks, the Imperial Bank of Commerce, is worth $150 today. The cheapest bank stock you can buy is the Bank of Nova Scotia, which is less than $84. It's basically, almost half price. Well, gee, that sounds very familiar with Ontario and, say, I don't know, Quebec. Yeah, it's about half in Quebec. In other words, the average price in Ontario right now is claimed to be about double what the average price in Quebec is for a house. So it's basically the same thing. If I'm telling you right now, I'm looking at this live as I'm talking on the show with Jim here right now. I am looking at the data live, and I'm watching the difference between the BSLS average big six bank share price and the actual average big six bank share price. And right now, there's $2 difference between the two. $2 difference, which is 2%. One day, folks. This is one single day. Imagine the magic I could work with 31 days, like the MLS average does with house price. And because it's house prices, I get to hide it even more because I own the data. And I'm never going to produce the data because I'm the Canadian Real Estate Association, the BC Real Estate Association. I will produce a summation of the data, but I'm never going to give you the data. So it's very easy for my BSLS average price to fool you, just like the MLS average price does. So right now, as I'm speaking to Jim right now, which is what, Jim? About 4:30 here Eastern Time.
1:30 in the West, on the coast.
I'm telling you that Toronto Dominion Bank stock is being traded at a rate of 0.273%. So right now, as of today, 0.237% of all the shares of TD Bank have been traded on an annual basis. Okay? Or excuse me, that's just traded today. At the same time, BMO is only trading at 0.131%, half. The Bank of Montreal is trading at half the rate the Toronto Dominion Bank shares are being traded. And if we look at the cheapest bank, Bank of Nova Scotia, it's trading at 0.142% versus 0.273% for TD Bank. Now, imagine what that does to the average price when your weighting of average price is dependent on the trading rate. The trading rate. The trading rate, which determines the trading cycle which records all house price illusion. I'm telling you now, right now, folks, that all to 5.9 billion shares of bank stocks are being traded at 0.197%. So as of today, almost 0.2% of all shares of Canadian banks supposedly are trading. At the same time, TD is trading at more than 2.5 times that. We're looking at here Bank of Nova Scotia. It's trading at on a ratio of 35.8, where the total stock is trading in a ratio of 49.6, meaning it's less representative in the BSLS average price. On Friday, at the close of business day, the BSLS average big six bank price, which we call share price illusion, was $111.84. At the same time, the real true, we're telling you the truth, average big six bank share price was $109.65. That's right, a 2% inflation simply because of the trading rate. In other words, what does the trading rate actually measure? It measures which buyer is active in the market today. Today, TD Bank buyers are extremely active. If I'm looking at here right now, Bank of Nova Scotia, so it's just refreshed here, folks. It's refreshed for 4/31 today. This is an amazing number, folks. The actual average big bank share price is $111. Okay? But here's the problem. A whole bunch of shares of those cheap those cheap stocks, the cheapest bank, were traded more frequently. Bank of Nova Scotia is all of a sudden, over the course of today, trading way more frequently. And guess what happened to the average price? Because more buyers of the cheapest bank stock were active today. The price is down to $104.73. In other words, the BSLS average price is only 94.2% of what the actual average share price is. You see, folks, this is how you get a $200,000 year-over-year gain in monthly house prices. A year ago in April, when the Toronto Real Estate Board was announcing that their stock was crashing, or that their house price was crashing, what they were actually recording is first-time buyers' share of the market had increased substantially. And now at the end of the year, here we are a year later, a year and a half later, first-time buyer share of the market has shrunk. In other words, people are buying way, way less Bank of Nova Scotia stock today, and they're buying a whole bunch more BMO and Royal Bank. And the people who are buying the most just happen to be CIBC buyers, which is the highest price bank share available. It's got nothing to do with the average bank share price. It's the BSLS average bank share price, where we measure the trading rate, allow the trading rate to inflate the average price and create bank price illusion. I know this discussion is a little bit confusing, and as my screen is refreshing before me, I can see why it is. Because right now, folks, now the BSLS price is 94.21% of what the actual price is. And here's the more fun. Because last Friday, the BSLS average Big Six bank price was $111.84. Today, two trading days later, because now they're closed, right? 4 o'clock. It's $104.73. It has dropped $7 in 2 days of trading. Now, if you go to the BNN or Yahoo Finance, or you go to the TSX website, you're never going to see that on there. Because if a stockbroker presented stock prices the way that realtors present house prices, the stockbroker would be in jail. The stockbroker would be sued. The stockbroker would be in charge by the OSFI and every regulatory body in Canada. But your realtor doesn't get charged. Your realtor is allowed to have the trading rate mislead you. The beautiful part about this discussion, folks, is this. If you go to the Toronto Real Estate Board and you download all their Market Watch reports from April of 2020 through till today, you can see exactly what I'm saying. You can see how the percentage of sales in April of 2020 was highly concentrated in the cheapest homes in Toronto. And then now, October, they're concentrated in the highest priced homes. No different than Bank of Nova Scotia stock and CIBC stock. The secret methodology used in the BSLS is the trading rate, because we don't tell you the truth that I'm not actually measuring the average Big Six bank share price. What I'm really measuring is the stocks that are traded the most today. And what I'm going to do is, in months where it's a positive in my favor, I am going to allow you to believe that the average price increased. And then when you're trading stocks the following month, everybody in Canada is going to believe you. Stocks really increased, even though they didn't. The only thing that changed was the trading rate. And depending on the category of bank stock, i.e. which bank you chose to buy today, will impact what the average price is. It's as simple as that. And the reason why no one can claim $100,000 is because if they ever attempt to claim it, we will disprove it the way that I just told you, that we created the BSLS average Big Six bank stock share price.
We'll have more with Ross Kay right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Carol, and James are first-time home buyers, and they ask, mortgage rates have increased almost 0.5% on 5-year terms over the last few months. Does Ross believe this will cause house prices to fall?
Okay, so this is unique, Carol and James. This is unique, okay? So this is the first time in history where rates increased, but we had the mortgage qualification rate in place. So I'm not going to talk about some irregularities between 2017 until today, because this final rate was set in June of this year, okay? So homes that are purchased have been purchased since June, well, more or less, let's say August for the sake of clarity, because there still would have been some trailing sales that weren't recorded. Those purchases and all purchases going forward, unless some government changes the rules, will be purchased under that mortgage qualification rate. So you're going to have to qualify for the mortgage under those terms. So historically, when rates went up, prices dropped for the same reason that the BSLS average house price works. If home buyers are buying cheaper homes, the average price drops. If home buyers are buying more expensive homes, the average price goes up. That's not the truth, because the actual homes themselves don't change at all. But what the average buyer is spending this particular month does change. So historically, a rise in interest rate would have been followed with a decreasing purchase price, which would have been represented as a lower average sale price, an MLS average price. Now, luckily for realtors, because it's always a year-over-year comparison of a month when trading cycles don't follow a calendar year, and because real estate board trading days on a month generally only line up about every 5 to 7 years, you really can't look at a year-over-year comparison on a single month. This is how you get house prices are decreasing in September, and all of a sudden house prices are decreasing in October. That's not true, folks. Your trend line is already in place. What's happening in that case is the seasonally adjusted doesn't take into consideration trading days or MLS reporting days, two totally separate things. But you need to understand them in combination in order to understand what's really happening in a housing market. When you're looking at monthly housing sales, resale data, or monthly sales data from an MLS system. So what I'll conclude with Carolyn James is this, is that the only thing that matters to you is the cost of the house and how much the expense of the house. Okay? Now, we have a problem with this, Carolyn James, because even when you go to the definitions for the accounting firm, any clarity of difference between cost and expense doesn't exist. So in the accounting courses, they will even claim that you can use expense and cost to define the same thing, where we don't. To us, cost is something that's non-recoverable. Okay, that's what a cost is. So when we hear housing affordability, the reason why we often slough off the comment is because we look at cost, we don't look at the expense. So while the expense may be higher than you really want it to be today, the cost over 25 years will be lower. So to me, I don't really care about today. What I care about is what my life is going to look at 25 years from now when I'm getting ready to retire and I'm going to quit working. My income's not going to be there anymore. So by using that reference point, I separate my monthly housing expense, which is how much of my income I have to commit to keep living in the place that I'm living in under the terms I have contracted to follow, versus the cost. You see, this is one of the confusions over the rent-to-own discussion, and it's one of the things that I am very reluctant to talk about because I know that organized real estate would weaponize it if they looked at it the way that we did. So when you talk about renting a property, that is your full expense. If your rent is $2,500 a month, your expense is $2,500 a month. You are going to get none of that money back. Now, that expense provides a beautiful roof over your home. It covers the property taxes, any housing repairs in the house. That expense that you're paying covers those things. But that expense that you're paying also is paying down the mortgage principal that the landlord owes. When you own a house, you are the landlord yourself. And each month, part of your housing expense is paying down your mortgage principal, which is reducing your cost. So to us, the cost is unrecoverable cost that you're not going to get back. When interest rates rise, your cost increases. Your expense increases if you want to own the exact same home. Your expense will probably stay the same because the price of the house will normally drop, but your cost will also increase. So this is sort of where the problem exists. And it's why you always have to look at your home buying process from a rental perspective. Every home that you are ever going to live in, you are the tenant of that house. As the tenant, you have two choices of a landlord. One, you're the landlord yourself. Your family owns the house as a business and it leases it back to you as the tenant. The beautiful thing about being a landlord owner of the property where you're the tenant is that your housing cost is extremely low. Your expense could be high, but your overall cost is actually lower. Or you could choose to be a tenant of a house owned by a landlord who is not you, who's not your family. And what you have to understand is 100% of the expense of housing, your rent payment each month is non-recoverable. It's gone. You can't get any of it back. The landlord owner who's renting the house out to their own family, their cost, generally speaking, will be zero over a 25-year period. Now, that's in the context of today's interest rate and the interest rate forecast that we have now for the next 25 years. And it also takes into context a minor amount of compound annual growth rate in your house value that would make the cost be zero. So yes, historically, rising interest rates mean a lower average purchase price, which becomes a lower MLS average price, which the entire universe believes is a falling house price. If we believe what we believe, in other words, house prices don't go up month to month, that also means they don't go down month to month. The only thing that changes is house price illusion that is created by the MLS average price, the same way that share price illusion is created with the BLS, Big Six Bank share price.
Another listener question for you. Both CBC and CTV reported that investors were the likely cause of a lot of house price appreciation during COVID. Do you believe this reporting was true?
No, I believe it's another organization, in this case TerraNet, who's been hiding from us now for a year, because when they produce their monthly housing house price index, we can go out and debunk that it's hogwash. So they have tried to prevent us from just making rational comments on their false presentations to the Canadian public because of their methodology. This is another case in point. If you read these TerraNet reports, you have to understand they're guessing. They are making assumptions, and from those assumptions, which to the uninformed or partially informed may sound logical, but from someone who's fully informed and fully understands what they're doing, it makes no sense. So you'll see that they use the term first-time buyers, okay? Their first-time buyer calculation is a partial calculation, meaning in some of the years, they have undercounted the number of first-time buyers. In other years, they have overcounted the share of first-time buyers because of the definition that they use. They used to qualify for this exemption. So the way that they determined a first-time buyer is whether or not that first-time buyer supposedly paid land transfer tax. Okay, well, that's not an actual calculation because in some years, there's a delay between when there is a rebate claimed for the land transfer tax. And since land transfer tax is claimed on closing, and then you have to ask for the rebate, the methodology that they're using here is flawed. If you go through the rest of the comments, multiple property owners, property purchases by buyers who at the time of purchase, also own other properties. Well, this is the same mistake that Realosophy made a couple of years ago when they included their report in the Bank of Canada's FSR. Home buyers who are buying their next house before their existing home is sold will often carry two properties. Now, they may use most often what's called bridge financing, which I have literally used hundreds of times with my buyers over the last 30 years. My family would have used it thousands of times with families over the last 30, 40 years. So when you see the comma at the time of purchase, comma, also own other properties in Ontario, what we know is their calculation on multiple properties is wrong. Because there are people who will own two properties for 2, 3, 4 months because the closing dates don't align, or because they didn't want the closing dates to align, because their second property, they want to go and renovate it before they move their family in. So these are what's called false calculations. This is another false metric. So just on those two definitions alone, I have debunked the report. Yet you read in the news today that they're also the cause for house price appreciation. Well, folks, if investors were the cause of house price appreciation, let's use some common thinking. What properties do investors normally get encouraged to buy? They normally get encouraged to buy tiny condos. Builders build tiny condos for investors. They don't build tiny condos for regular Canadian home buyers. They don't even market them to regular Canadian home buyers. They market them as pre-sale condos through to real estate investors. All of their marketing products are geared to real estate investors. So if these investor calculations were really true, we know that those investor buyers are buying the cheapest home. If they were really buying the cheapest homes, the average price would be lower, because the same methodology we talked about for the BSLS works for the MLS average price. So this is why when you read things like this, huge reports by a corporation, and then the corporation also uses the term that it's their proprietary data. We have exclusive access to Ontario Land Registry information. Well, that isn't true either, folks. Any real estate agent in Ontario who has a Geo Warehouse account has full access to all the exact same information. Except you need to be able to read the land transfer registry data in combination with how the home trading infrastructure is functioning, and then try to extrapolate the truth from it, which this report does not do. And as an aside, folks, if you look at their report, it's citing Ontario. Now, what's the strange thing about this is one part of their report debunks everything organized real estate has told you in Ontario for the last 50 years. Because in 2017, the year when record average house price hit in Ontario, the share of sales to first-time buyers was the lowest. It was below 20% on their charts. In other words, the average house price gains recorded in 2017 had nothing to do with house prices. It just meant that fewer first-time buyers were commanding a share of the market, buying fewer lower-priced homes, which means the average price inflated. And if you look at the trend lines here, you'll see that's exactly what happened with the average price in Ontario. It's inversely proportional to the share of sales being purchased by first-time buyers. It's proof that organized real estate, specifically Tim Hudak, an Ontario Real Estate Association, who has not come out and debunked this, is willing to allow you, the public, to believe something that isn't true.
Another question for us from one of our listeners. Jim in Carleton asks, why are resale homes not disclosing the energy costs to home buyers? I feel this is a needed number to make a decision on.
No argument with me here, Jim. Lobbied for 6 years to have energy costs mandated in the province of Ontario. The previous government, the Liberal government here in Ontario, was mandating that you had to have an energy audit done on a home before it could trade hands. The Ontario Real Estate Association, the Canadian Real Estate Association, the Toronto Real Estate Board, the Realtors Association of Hamilton, Burlington, all the major real estate boards in the province fought to stop it. They fought to stop it. There was only a handful of realtors who wanted to see the mandate continue, and we were no longer part of organized real estate at the time, so we could not assist them. We had to work on our own. It is insane that people are going to buy a home without having an energy audit on it. There are products available, Jim, right now. There are products available that you can use on an existing resale home to improve its energy efficiency before you even move in. There are government grants that you can access to utilize these new technologies. I'm not talking about a heat pump here, folks. I am talking brand new, cutting-edge technologies that have now been time-tested and are recommended by the leading housing scientists in North America that you have available to you, that you should be using on every resale home that you buy. But your local realtors don't want you to do that. They want to keep energy costs from you. This is not a debatable topic, folks. The Ontario government had mandated that you were going to have an energy audit done on any resale home that traded hands in the province of Ontario. The huge lobbying effort by the Ontario Real Estate Association, led by former Conservative leader Tim Hudak, hired on by OREA, just to fool the win government, by the way. The Toronto Real Estate Board, the Canadian Real Estate Association, thousands and thousands and thousands of realtors all fighting against it. Stop that from happening. Why? Why would they stop 50% of the people involved in a home transaction in Canada from being told the truth about any home they're buying, i.e., how much is this house actually going to cost us to heat? Can we improve the quality of this house to lower our energy cost? What's the difference between this house, House A, and House B in terms of energy cost? Do those energy costs infer a lower quality of home or potential problems in a home? Because I'll tell you this, folks, a home, generally speaking, that has been built post-1980 that has a higher energy cost than another home is a home that is set up to have more problems, substantially more problems. The science behind this is irrefutable. There is no housing scientist in North America who would argue with what I just said. So the reason why, Jim, that you can't get an energy cost for a home is because realtors think that will make it harder for houses to sell. It'll make it harder for them to earn a commission. Fewer homes will be traded. Oh, wait a second. The trading rate would decrease. Gee, doesn't that mean that all of the house price gains from 2017 forward may have been held back had energy audits taken place? Nah, that'd be too easy.
Ross Mary asks, the Canadian Real Estate Association claims the average home in Canada was over $716,000 in October. What does Ross believe the average home is really worth?
What do I believe the average home is really worth? Let's do it for you live right here as I'm talking to you. What was that person's name, Jim?
It was Mary.
Mary, okay, so Mary. So I will do this live on air. We're at the end of the show. It's been we did another long show here. A lot of the listen. Look, these shows are not geared for people who do not want to listen. These shows are not geared for people who do not want to question what I'm saying or what anyone is saying about real estate or about house prices. The show is for people who question the norm, people who demand answers, people who do not want to make a mistake and harm their family. So I'm at 63 of 92. So I'll tell you right now, Mary, okay? 70% of the homes in Canada today will cost you less than what the Canadian Real Estate Association claimed the average home is worth. 70% of the homes on the market today can be purchased for less than what the Canadian real estate has got everyone believing the average home is worth. When you use an MLS average price or the BSLS average price, you're doing so as a salesperson to create house price illusion that allows you to extract a commission from an asset that doesn't change in value. You create false change in value by the methodology used in your average price calculation, and from that you're able to extract a commission. 70% of the homes available today can be purchased for less than what the Canadian Real Estate Association told you the average home is worth. This is why all these house price to income ratios don't work. This is why the house price to GDP ratios don't work. This is why your household income to mortgage debt expense doesn't work, because you're skewing your data 20 to 30 percentage points in one way or the other. You need to be always using the exact same data point, which is comparable to the exact same data point in another data set. When you commingle your data sets, when you confuse the average home being worth $1,716,000, when you should actually be using about $500,000, you've got $200,000 worth of mortgage debt unaccounted for. And then you wonder why they have these comments about home buyers are spending 50% of their income to buy a house. Well, clearly, no one has worked with home buyers and ran them through the mortgage qualification, because that would never happen. The only way it happens is if there's mortgage fraud. And if there's mortgage fraud, we will leave that to others to discuss. What we do know is this: the vast majority, like 90%, or more than 90% of all Canadian home buyers buy their homes under the same terms that their parents bought their homes under. 70% of the homes in Canada available to be purchased today are under $716,000. That means the average home that the Canadian Real Estate Association is describing is a home at the top 30% of the housing market. The top 30%. The bottom 70%, they're not even talking about. Why would they do that? Commission, commission, commission. When the average realtor doesn't sell one house in a year, you got to do everything you can to try to extract a commission.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, he'll be glad to answer them. If you send them to info@housestreet.com, find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.